thank you everyone for joining. So really the basic, the objectives here, we're gonna understand how a common dealership financial statement is laid out. They're all pretty similar. We'll talk about that when we get into the example, and then how to use it as an analytical tool. And then I'll point out some metrics that are used to analyze the balance sheet. We will head over to the gross profit and talk about how to analyze that, and within the departments, how to drill down and look into those, and then we're gonna how to compare expense results to norms, benchmarks. There's different ways dealerships account for other income and deducts, so we'll talk about that and where that shows up on the financial statement. Talk about maybe some trend analysis, and then the memo accounts. Okay, so the dealership manufacturer statement, as you know, we're going to use a General Motors statement today. We're going to analyze that one, because for one, I think it's the best. I'm also mostly familiar with that statement, but I really do think it's probably the easiest and best to read. And then within there, like on the GM statement, you can actually click on the account and it'll take you to the accounting manual, the General Motors accounting manual. Didn't know if you knew that. And there's also a similar statement. The National Independent Auto Dealer Association has a statement that's very similar, just not as big because it doesn't have all the departments necessarily, but the layout is very similar. So, and the goal here, when I look at a factory financial, and what I would hope for you is more just to identify, you're not going to get any answers really. You're mostly just trying to identify areas that are good and bad. So, we call it a diagnostic check. And so, like when you take your car in, and if your brakes are good but you need belts, there's good brakes, belts need replaced. That's kind of how I approach the factory financial when I analyze it. I look and say, okay, what are you guys doing right? And where are my questions? And how can we get there? So, okay, let's bring up I'm going to go ahead and share my screen now. Let's just talk about the layout of a financial statement. So the balance sheet is on the first page. So almost all the factories follow this. Well, they follow this format. The rest of the financials tend to be a little different. They're all pretty similar to this format, except for FCA. They have one of the most interesting financial statements I've ever seen. Some parts of it don't have totals. To me, it's a little difficult to read, but anyway, you still can do a similar analysis as we're going to do here. So the balance sheet, in order of liquidity, the assets are on the left. So as you go from current to long-term assets, and then your fixed assets are down here at the bottom, and then any other long-term assets are listed here. And then on the right side of the balance sheet are the liabilities, again listed in order of liquidity, short to long term, and then the equity breakdown. The profit and loss numbers do show up here. So this gives you the number count, and then your results for the month, and then year to date. So for example, some of the differences, like Ford, for example, the unit count in sales, I think, is on the bottom of page 2, for example. So on the second page of the financial is a summary of the dealership, and then broken down into variable and fixed. The summary of the dealership, and so the way the expenses are laid out are different too. So some factories, for example, in the expense categories, they'll put the F&I compensation as a selling expense, where in the GM statement, it shows up here in gross. So finance, F&I comp right here shows up in gross. So just keep that in mind, depending on the type of statement you're looking at, will have an effect. The way the expenses are categorized are pretty similar throughout the whole thing, throughout the different manufacturers, I should say. And then the expenses, these are more the controllable expenses, the semi-fixed, and then you have the fixed expenses, and then the summary of the dealership's operations, and then you have some adds and deducts. We'll get to those later. And then it breaks it down further by new vehicle used. So the variable departments are broken out, and then it breaks out the fixed ops as well. So you have sales and gross. We're going to get back into this. I'm zooming through this just so you know the layout. And then more detail on the actual vehicles that are sold. And then that was new vehicles. And then here's used, and then fixed ops detail. And then F&I, and then some supplementary information. So we'll go back and discuss all that. But let's jump back into the balance sheet. And so one of the things that I look for off the bat on the balance sheet, obviously, is so you just look at your cash in bank. You know, if you're negative, obviously, you know, that might be a concern. Why are you there? If you have a lot of cash, can we maybe use it to buy down flooring, that type of thing. The contracts in transit, I just look for reasonableness. You know, what were your sales for the month in variable? You know, 8.5 million. You know, not everything gets financed. Again, this is just a reasonableness test. And so I look at contracts, and you know, they don't necessarily look terrible. So again, I'm just looking for things that are jumping out at me. Receivables, negative balances here would concern me, but this is where we really get into it. And this is the inventory, and this, you can spend a lot of time on here. But for example, you can do a real quick and dirty days supply inventory. So if you figure out you have 49 and 146, that's 195 new cars in stock right now. So that shows your those numbers there are your units in stock. So if you have 195 in stock, and here you sell 465 through 8 months. So if you're selling 465 through 8 months, you're selling 58 units a month. And you have 195 in stock. And so that means you have about 101 days supply of new cars. So that's just a quick and dirty. Again, it's not going to be totally precise because there's other variables in there, but at least it'll give you an idea if you're way, you know, if you're way overstocked or understocked. And then, so you come down here to used cars, and here we have a problem, right? We have 650 used cars and 1,710 used trucks. Well, there's no way. I did the calculation on this, and based on their averages, they should have about 230 used vehicles in stock. So there's an issue here. So we're going to talk about these later, but so now I found a problem. So now we can go back and say, okay, why are we reporting 1,710 used trucks and 650 used cars? So, and some of the other things, some of the other tests that I do as it relates to inventory. So a lot of times with used cars, so you can go into the detail and you can actually figure out, you know, what your average sales price is on a used car. And then you have your average gross. So here's the used car detail. So for example, let's look at the used cars retail, for example. So if you sold, you know, 28 million worth of cars at 1,238 units, your average sales price on a used car is $23,110. So what that can help you, like if you go back and so we look at, let's go back to page 1, and we have used cars. Now this number is not right. So, but if we had the right number in there, we could figure out, so 742,000 dollars in cars, you know, you got 23,000 a piece. Let's see what that is. I hadn't run that number yet. So if you do that, you're looking at 742,914. So I would expect them to have, you know, 30 or so cars in stock, maybe based on that sale, maybe a few more, right? Because you have a little bit of gross in there. So anyway, that's another way that you can drill down into the actual detail of the financials and get an understanding of what your inventory looks like. Another part that is good. So, you know, you can look at, so right here, it shows your used retail total. So if this was like a big truck store, you know, you would expect them to have more trucks. Again, we don't know what these numbers really are. So, you know, how do you really know? You can do days supply in total, but how do you really know if you have the right mix? So then that's where you go back here again and you go into page 6, You can say, okay, I sold 1,200 and I retailed, retail is what we want, my bad. So you retailed 330 cars. So that's 41 a month that you retailed. And then, so you do the same exercise with used cars. And then what that allows you to do is it allows you to go back and determine, you know, back on page 1, if breaking it down by by cars and trucks rather than used in total. So that's how that works. One thing I want to mention too, any questions that come up, or please, we have a Q&A button. I'd be happy to stop, and I like this to be as interactive as possible. I always prefer to do meetings in person, but under the circumstances, we'll make this work just fine. So, okay, so after we get through with inventory and kind of look at that, I spend a lot of time on inventory typically because it is the biggest asset generally on the balance sheet. It's what drives our business. And then you can do the same type of exercise with the parts department, for example. So you have $218,000 in parts. So we can go take a look at parts gross. So parts gross right here is 85,000. So if you take the difference between the sales and gross, you're going to get your gross profit number, right? So, and that's 102,367. Jump back over here, and technically you should probably add up all of these parts right here, and then you can figure out your day's supply. So just looking at it, they probably look like they got about a 75. Well, let's see, I have a calculation. We have like 70 days supply of parts, I think is what I calculated. Yep. And so that's not terribly bad. So, okay. And then another area to look at is work in process. So if this number is really high, that number does look a little high to me. It's usually in the $4,000 or $5,000 range. Again, it'll vary if you have a body shop. That number tends to be quite a bit higher. So that might be something that we need to look at. And then prepaid expenses. And this is where a nice place for managers or people to park expenses. I worked once with a general manager who he was strategically planning his wholesale losses by putting all his wholesale losses and prepaid expenses and just taking them throughout the year, which didn't go over well. So we watched that account, make sure there's nothing in there. That looks a little high, but again, if you have a rent deposit or something, that could be nothing. Just remember, this is about getting questions and finding out things that just don't look right. Did the fixed assets are here, and then on this side of the balance sheet, the other thing another test I like to do is take a look at the vehicle inventory balance and compare it to the new vehicle floor plan balance. And I also do the same with used. So just, this should be close. You would expect this to be somewhere 3 to 5% higher probably than what, considering holdback and other variables. And then you definitely, you would expect a lot of equity in the used cars here, and which they do have. One other thing I want to mention about the unit counts is I do understand and I appreciate the fact that there are beaters in there and wholesale units and, you know, things that will skew it. But again, we're just trying to identify areas and understanding that that's in there, and that could very well be one of the issues that you have, is that it's just the reporting, the timing of the transactions turned out that way. So let's see. Okay, that's about it on the balance sheet. Oh, one more thing I want to note here too on parts inventory is if you go to the parts department detail, and you can see there's an adjustment account for parts, and this is usually where they put inventory. So here is you can see that, right? Oops. So they had a $15,000 actually write up. So that, to me, that could be a write up. Very well, it could be something else, but to me, that's a write up. So it begs the question, if that is in fact a write-up, why is it a write-up? Are we packing our parts? You know what? It ended up being like 7% of the total parts inventory, which is too high of an adjustment. So I don't care if the adjustments are up or down, they need to be accurate. So, you know, I would want 1 or 2%, somewhere in that range, but that's me. So you look at that account. And so I had another client I looked at, and they had a big write-off. And it turned out that when I talked to the controller, she said that they hadn't done an inventory in many years, and they had finally done one. And so it was an opportunity, you know, to evaluate, you know, how the parts department is ran, how the inventories are done, are they doing perpetual bin counts, that type of thing. So there's a lot of opportunity, a lot of questions that can be brought up from there. So that, let's see, we talked about prepaids. Okay, I think that is it as far as the balance sheet goes. If there's no questions, we can move on to the next polling question.
No, there is a question here in the Q&A.
Okay.
On certain manufacturers or certain softwares, some of the unit information may be manual entry fields, such as a unit information on page 1. You pointed out that there may be errors in units reported in inventory. What are some of the common issues resulting in errors in these fields?
Well, the most common would be, so for example, some of the manufacturers, you have to go in and add, like you said, manually add the account. And that's usually the reason. The account just the field hasn't been updated within the DMS that flows to the factory financial statement. It's usually that simple. That's really the only thing I can think of. Just not putting the right number in. And what it looks like here is they did new cars, but they forgot to do used cars. And so that's what caused it. So hopefully that answered your question. All right, well, we'll move along then.
We also have another question here, Bob. If you haven't already, can you speak to working capital and the manufacturing standard?
Oh, okay, yeah, we can do that since it was on the balance sheet. So absolutely. Let's see. So the working capital standard is right here on the GM statement. I think they're all pretty much on the front page. And so this is the actual. So this is how it's calculated automatically based on the formula that's put in there. And so this is your actual net working capital. And then this is the standard. So General Motors comes out with the standard, and you know, they look at different things like your inventory and your average AR balances and things like that. And they determine what the standard is, and they evaluate it. And then if you're within standards, you're fine. A lot of times what I'll see is if you continuously can't meet the standard, most of the time it's because they've set it too high, and they'll work with you to bring it back down into a manageable area. But this is where the working capital is presented. And as for UCPAs on here, you know, this could be something where you might want to consider a disclosure if they're out of compliance. Typically it's not a big deal, but this is where you see the calculation. So all right, so let's move on to variable growth. So variable operations are here, as I mentioned, and then we look at variable gross profit. And so variable gross profit consists of new vehicle gross profit. Oops, oh, happy fingers there. Used vehicle gross profit and F&I gross profit. So that's how those three are there. So, and then the breakdown even more I talked earlier. So here is the actual breakdown of the sales, the vehicle sales, month to date. Oh, I think I forgot to mention that. These are all, the green, the left side is month to date, and then there's the year to date on every one of these. So the green is month to date, orange is year to date. And so then we go to the detail, and we can kind of look at here. I don't try to tell dealerships how to sell cars or anything like that. So I just kind of look at this again for, you know, just to get an understanding of what exactly, how they're recording transactions, you know, where the factory money is going, for example. So they're showing like they took some pretty heavy losses on the Spark on the one that they sold, they lost a couple grand on it, right? But they've been making money on Spark throughout the year. And so is that related to factory money? Are they putting the factory money that they get for meeting the SFE standards? So that's for certain, like if you meet certain unit count reach of certain units. So for example, say the Spark was one of the units, if you hit that level, you would get factory money on that. A lot of dealers will put that money, factory money, against the gross, which is what I would recommend. You typically, you don't pay the salespeople on it, but you pay the managers on it. And so maybe here this month they just didn't meet the standard, and they took the deal because they were hoping they would hit it. I don't know why, but anyway, it begs the question, where's the factory money being recorded? And if it's not being recorded here in gross, then it's probably being recorded down here in other income. And so there's GM reimbursements. This is usually the other money that's not related to the deal, where they don't use that money. It's like EBE money. It's branding money, that type of stuff. That goes here. So based on that number, that 74,000, it sure appears to me that they're putting their money against gross. So again, that's just looking for those kind of things. I also noticed that they had a lot of accessory sales, and so GM has a really robust accessory program. So I just make sure that they were taking advantage of it. Maybe that's why they have such accessory sales, and are those truly accessories? And anyway, so that is variable gross on new cars. And then if you go to used car gross, here's the detail on page 6. And again, I kind of look here. I look for the PVR. That's a little low to me, so I would probably mention that. That's a strong number. Again, that number is without F&I, just like this number is. And then I look at wholesale. It's pretty rare nowadays to see a wholesale loss. So if I see a wholesale loss, that kind of jumps out at me. Like, are you putting your write-downs there? What's happening? Why did you have a loss? And you can see it's here as well. And this is usually where your wholesale adjustment account would go. So anyway, that's kind of, I don't spend a lot of time on the sales, vehicle sales part of it. I just look for things that jump out at me that are maybe not normal or not what I typically see, depending on the market they're in and so forth. So that is that part of variable. And then the final part of variable is F&I. And I just, again, looking, you can calculate penetration oftentimes on here, at least for reserve. And so if you go back and you say, okay, how many new units did we sell? 465. You're saying we financed 417 of them. So that's not 90% penetration. I think the NAD average is 93%. So depending on what market you're in, so that looks like that's really strong. Some of the factory statements actually show like penetration of service contracts, and that's really nice, where I can't really calculate that in a GM statement, but just be aware that some of the other factory statements do have penetration numbers for the warranties and that, which are really nice. And I just I look for PVRs. These are real strong numbers, and that's the commentary that they would get. Chargebacks, just 4,000 a month isn't that bad, and for new, and so nothing here really jumped out at me, but that's how I would analyze F&I. So okay, so I'm going to move on to fixed gross. And if there's any questions, keep them coming, please.
Okay. Bob, this is Jen. A few people are wondering, can you give a little bit more background as to you and your expertise, and just kind of how you came to have the infinite knowledge you do about all of this?
Okay, yeah, sure. I'll just skip to it. I did some, I started out as a porter and did service writer, dispatcher, all that, and went to school for dealerships. I went to Northwood University and got an accounting or a degree in automotive marketing. And then I went and got an accounting degree and joined a firm in the Midwest that specialized in auto dealers. I was an auditor for, I don't know, 10, 12, 15 years, 12, 15 years, something like that. I moved to Vegas early in my career, a couple years in, and hooked up with the firm that ended up joining I. Bailey. And we specialize in auto dealers. We were the dealer firm in Vegas. So I worked with the big Finley group and for many, many years, 10 years, I think. And then I went and joined Finley as the corporate controller. I spent a little more than about 2.5 years with them, and then went to Nashville and hooked up with a small group. We had 2 stores. We ended up purchasing one, and that's where I really got into the nuts and bolts of things. I was doing everything from accounting clerk work to CFO work, and really dug in. And I think I found out that I'm probably not controller material, so ended up relocating back to Vegas and hooked up with one of my old partners that I worked for at the old firm that joined I. Bailey. And they brought me in July of 2018 as a dealership consultant. And that's what I've been doing ever since. Okay, so let's go to fixed ops. So we have the breakdown, mechanical, which is service department, and then parts. And then if you have a body shop, that would be here. Rarely ever see G&A used. So as far as gross goes, let's go to where the detail is. And this is where I feel this has just tremendous amount of information. So first thing I look at is the overall gross. So that's 69%, not bad. Not bad. 70 to 75, that's where I want. So they're pretty close. For the month, they were down, but I'm looking at year to date mostly. So then I start looking at the individual areas, and here's one. So customer pay labor is 64.5 and quick service 78. That, to me, those should be reversed, or 78 is awfully high for quick lube. So it makes me wonder, are they putting, are they putting the right labor to this account? Why is this number down? So I always kind of compare these, and then that's just again a question. Maybe there's nothing wrong, maybe there's something special or something to happen. But and then looking at warranty, I expect that to be pretty similar to customer pay. And then what I do is I jump back a page. Where is it? Sorry, don't get sick. And I look at, okay, we're getting $130. So this is on the bottom of page 4 that tells the labor rates, right? So this is customer labor, this is extended contract, quick service, warranty internal, and then this is service department, body shop. So what I'm showing here is we're collecting $130 in customer labor, but our warranty rate is 119. So we may have an opportunity to get a bump in the warranty rate. So that would be something I look at. When I was raised in the business, the best practice was internal should equal customer pay. But I've had some pushback on that lately, and the arguments are good, and we might do a little Q&A on that as well. But that you want to give them a break. I don't necessarily agree, but anyway, that's for a different topic. But this is the information that's in here that you can pull out. So let's see. Get back to fixed ops. So then I'm never really concerned about sublet ever, and shop supplies. A lot of put shop supplies here, or I've seen dealers put it on the other page, the expenses as an offset to the supply expense. And then I'm also looking for unapplied labor, and I don't see any. So typically it would go here. Unapplied labor would go here. So that's for you know, technicians, typically it's the hourly kids who are doing the quick lubes, which I would have expected this number. If this number is so high, then I would have expected an adjustment to go through here. So I don't know. Anyway, it just again, it begs the question: what's going on? How are we recording our unapplied labor? How are, you know, our techs that are standing around? How are we categorizing them? Where are we putting them? Because if you don't have any, you can't really mind. If that's a big number, right? You're a general manager and your service department has a big number in cost of labor, unapplied labor. What are we doing? Why are these people standing around? Let's get them busy. So, and maybe they're cleaning the shop and doing stuff like that. But anyway, it's again, more questions. Then I run down to parts, and I usually expect to see 35 to 40% in the parts area. So and the warranty claim number is real strong. So these are real strong numbers. Quick service number, real high again, which to me is counterintuitive. Looking at internal, strong internal gross. So the pricing looks right. Counter retail's a little weak, not a real big number. And then the wholesale, depending on the volume of wholesale. So if you're a large wholesale business, or let's just say you're like this wholesale, I would expect it to be about 20%. They don't do a whole lot of volume. You know, who knows why it's there. It's probably, I don't even know if it's worth addressing for, you know, 2,000 a month in sales, but what I'm looking for here though is 20%. And if they have a lot of volume, then I would expect a lower percentage, but then I would expect them to pick it up in these purchase allowances here. So this is the allowance you get from the factory when you meet certain purchasing standards and so forth. And then we talked about this one, the write up. So, and then I don't really, tires, gas, oil, and grease, I don't really pay too much attention to the gross here. As long as I mean, it's, we're not in the tire, we don't sell tires to make money off tires, right? It's just a way to help get customers in. So not a real big concern there. And then if it was the body shop, if you had a body shop, where's the body shop? Right here. These grosses tend to be lower than the mechanical, than the service department does. So, you know, I would expect lower gross. Again, I will look at the benchmarks and compare them, and then bring out any questions I had in that area. So, okay, that is it on gross profit as far as how I look at a financial statement from that standpoint. We can, if there's any other, we can go to polling question 3, and if we have any questions, I can address them. So let's go back, and I guess we'll move on to let's talk about how expenses are laid out on a financial statement and how I analyze them and what I'm looking for. Shoot, I just realized typically I must have hidden these columns on accident. So usually there's if these columns are visible, there's columns that say per vehicle retailed and gross profit, percent of gross profit, and that's what we measure, right, in dealerships. That's what we care about, gross profit. It's what our pay plans are based on it. We measure all of our activity on it. All of our expenses are measured against gross profit. So my apologies, but there should be a column here that says gross profit. And so what I kind of do, a percent of gross profit. And so I kind of look at salaries and expect them to be, you know, somewhere 25, 30 range, and percent of gross. And then when I scroll down here and I just kind of look for things that look out of whack, right? So delivery expense to have a credit balance, that's not necessarily bad, right? There's a lot of dealers, well, they get money from the factory, they'll put against their, or they'll have a pack maybe that they'll pack, and they'll put that against delivery expense and so forth. So it's very often to see a credit balance there. Then I come down to here and I'm looking at advertising, and to have a negative balance here, I'm just missing today on that, is a little baffling, especially when you have it here. So I'm guessing the way they're applying the credits they're applying them in 2 places. So one of the things that I like to do with advertising is take the net number and, you know, figure out how much per unit are you are you getting, and then compare it to what the industry averages are. So that's one thing I would do. So you could just take this whole net number. But as far as presentation goes, I would prefer to see all the credits in this account. The other thing that I notice on advertising, and most dealers do this, almost all this money that's spent in fixed ops is you're going to get it back from the factory. And almost no dealer posts the credits to the service department. Now, granted, they're probably not paid on it, but if you want to measure, if you want to use the factory financial to measure how far your new car advertising or your variable advertising is going, I would prefer to see the credits that are associated with parts and service applied here. So that would be one comment I would give to the client on this one. Then I just kind of scanned out looking for things. If they had a lot of contributions, I would be concerned, and I would probably say, you know, can we really, are those sponsorships? I mean, are these really advertising? We're limiting our tax deduction if we're putting these all as contributions. I look at policy work, and you know, they're running about $6 grand a month. They did $9 grand last month. That seems a little high. Might want to talk to them about that. I would expect outside services to be really high, one of the higher expenses. And then the interest, this got me too. So they've actually taken more in credits than they have in actual interest. So that tells me that they're booking the interest when they get the vehicle. And the proper accounting is to book it when you sell the vehicle. I have dealers who do it both ways, and I've gotten in arguments with them, not arguments, but I don't know how you want to word it, but it wasn't an argument, but it was maybe a difference of opinion when it came to how it should be recorded. But so that's something I would probably talk to them about. And then you have a big number miscellaneous expense. That seems pretty high. So I'd like to know, I hate miscellaneous expense, should be close to zero. I would be going, why is that number where it's at? I usually like to see consistent rent numbers, and again, and then utilities, depending on the time of year and so forth, and where they are, where the dealership is, that may beg just some questions. So then you can go, and what's nice is if you do identify a problem, so now you take this and now you can dig into it. And so you see, like, for example, 41,000 of this expense is related to variable, and it's split pretty even between new and used. And then you do have some expense here. Yeah, you have pretty 14 grand. So I would definitely be asking, it looks like it's across the board. It's not in one department, but that's what's nice about having the breakdown. You can see, it'll allow you to get precise right away, right? So you can see where you have problems, and then you can go address them and figure out where exactly are those problems occurring. Are they in parts or in service across the board? And then you can go through and if you saw, you just go back through the departments and dig into the individual expenses. So that's really about all I wanted to talk about with expenses. Looks like we have a question. Floor plan interest. Please talk more about floor plan interest. You said you shouldn't be recorded until the unit is sold. Yes, that's a gap. It's a generally accepted accounting principles recommend that when you defer the interest until you sell the vehicle. So because you haven't actually earned it until you sell it, I guess is the theory behind it. But that's I hope that answers your question. That it's a gap treatment. I don't know how else to explain it other than that. So but again, a lot of dealers don't. I have a lot of dealers that don't defer it, and to be honest with you, typically it's not a material thing, so it ends up not being. Yes, I'm talking about the credits. Yes. Okay, I think we had a misunderstanding. Okay, cool. All right, so I think that's resolved. One thing I want to cover before we move on to the final piece is these other income accounts. So I like to do, so one of the things that jumped out at me, right? Negative doc fees, really? That's not how it's supposed to work. And so and what I do is I'll do like a doc fee test, and I'll take your year-to-date doc fees and divide them by number of units retail. And it ends up being like $119 a unit. So, but we know that credit's in there, so we know we have an issue. But the reason I look at that is, for one, are you charging doc fees? And if you are, a lot of states, at least, I'll qualify it that way, require that everyone gets charged a doc fee, whether it's a fleet, commercial fleet, or an employee, or friends and family. Nobody can negotiate out of it. Like Ford, I think, for example, is one that has a real tight doc fee law. So I just want to make sure that we're charging it on everybody. And if we're not, is it okay? And there are ways around it. So I worked with a company that had a huge commercial fleet. And we found out that the state required us to charge doc fees to everybody. So they just ended up putting it into gross. The customer actually didn't, it had to be displayed on the buyer's order, but it was understood by the customer that, look, that price is, we've negotiated that $4.99 or whatever out of your price. So there's ways around it, but you just have to report it. But that's what I want to cover on expenses. Okay, no more questions. I don't see any more questions. Oh, co-op money for the factory. Put that in advertising rebates by department, or just against the department advertising. I would put that in advertising rebates. That way you can see that what you're getting. I would absolutely put any co-op money into the rebate account, and that's the only place I would put it. That way you know what your gross spend is, you get an idea. Like I think with GM, if you follow their programs, you can get about 75% of your money that you spend back. So it's a better, for me, it's a better way to track it. Again, if you're not using the factory financial as an analysis tool, then maybe it's not going to matter. But I just think that it should go there. So, all right, do we have any more questions? I think that's it for right now. Okay. All right. Let's go on to the next. Oh, I want to just real quick about trend analysis. We have some really cool tools. I'm not trying to sell anything. I'm just, one thing I like to do is pull the trend and look at the trends. I look at like a 3-month trend, and I have a nice, it's set up in this format. It looks just like the GM statement, and I can tailor it. I've tailored a Ford statement as well, and you can do the trend analysis. So you look at how it's gone over time. It's really powerful. So I would recommend getting that into your program if you don't already. It sounds like a lot of us are already monitoring expenses anyway. So
can you talk about Lifo adjustments? Why are they a deduction from income?
Okay, sure. Lifo, well, it could be a deduction unless you had a recapture. So, Lifo assumes that the prices are going to rise every year, and so you're allowed to, if you do have the Lifo election, you're allowed to figure out what that difference is between, the difference in the price indexes and then so you get to post it to cost of sales. If you have a layer, if you're adding a layer. So if we do have inflation and you do have an increase in the LIFO reserve, then you get a cost of sale deduction. If you don't, and it's only happened a couple of times I can think in my career where it flipped and you actually had a recapture. And it's really, that's where you have an income pickup. So, but most of the time you're going to get a deduction, and here's the actual balance sheet amount. And then the LIFO reserve is down here on page 3 in the other income and expense. So the LIFO adjustment is here. So just a little caveat, the IRS requires you to submit one factory financial statement with a LIFO adjustment on it to be in compliance. So this number usually stays 0 until the very end, and then usually in December, your CPA will give you an estimated LIFO adjustment. And as long as you post that and submit it to the factory with that adjustment on your income statement, you're fine. You should be in compliance. So, okay, hopefully I answered that question. All right, so these are memo accounts, right? So when I see these numbers, these tell me that these aren't right. We talked about these. Memo accounts, last page, fill with them. These are all memo accounts. Most of this stuff is hand entered. And so when I look at these, and these are really important, right? So if you want to compare, I mean, if you want to calculate gross per employee by department or overall, these employee counts need to be right in order for your numbers to be accurate, for you to be able to manage your business properly. And so you also have, you get an idea of what your aging looks like on your used cars, but these numbers are only as good as they get put in, and it does take some work to get these numbers together and put them in, but they're really important if you're going to use this as a tool to manage your business. So and then it comes down here and you can see your receivable aging. I don't necessarily, maybe this number's right, but I've seen some where they've had, you know, over $1.5 million in receivables and none over 30 days, which kind of blew my mind. And I had another dealer that they had like 120 days supply of cars, used cars, but they had nothing over 45 days. And that was just because the memo fields weren't filled out. And when I see that, and it almost always holds true, when the memo accounts are messed up, it's because there's not enough attention to detail. And it's often a problem in the office, whoever's preparing it is, and it ends up being more problems. Usually I can pick that out of the financial statement as well. But in this case, I only saw the one error with the vehicle count. So I don't have a whole lot of concern, but I've worked on some where there's credit balances in the AR and there's debit balances in AP, and the memo accounts are all wrong. And then it turns out the person had no accounting background or wasn't a good controller or good office manager, was in over their head or whatever reason. But just want to introduce you to the memo accounts, and how, to me, they're really important, especially if you're going to use them like for this type of exercise and so forth. But those are what I have. Let's see if there's anything else. Yeah. And then, oh yeah, and then we talked about the labor rate. The labor rates are also memo accounts. So the stuff in the bottom down here, this is all memo as well. So any of the non-financial numbers are the memo accounts. They're typically manually entered. Okay, that's it. I'm done. If there's any questions, I'll take them. Sorry, we went a little over. We got a little late start, but I appreciate everyone hanging on. Okay, great. Well, thank you everyone for attending, and I hope you got something out of it. Feel free to reach out to me with any questions, and I'll do my best to answer them and help you.